Welcome back to another episode of my trading vlog, where 80% of my views come from returning subscribers. If that's you, hit the like button. If it's not, consider subscribing. Remember, analyze, make a plan, follow the plan, no fear, no doubt. Starting with SPY on the minute time frame here. I followed up with a analysis from yesterday, this morning. We had a big rally, which I was expecting. The target was 395, but as I saw the uptrend form in a narrowing price range, I said this is some sort of diagonal this morning and that we were likely to find a retracement before pulling back up and reaching that third wave target, which we haven't yet done, but we have seen that dip, which I called for this morning, and now we have this nice reversal forming a high and tight flag in after hours. It's very, very likely we'll see that target reach before markets open, and then markets might even dump. And that would just be a great way to trick the day traders out of their profits there, if that's what you're going for. I'll do more SPY analysis on a larger time frame in the future. Right now, I'm just going to zoom out to the hourly and say we're probably bottoming down here. If we're not bottoming, it's another dump incoming. So yeah, it's just super volatile. If we get below that 386 level again, watch out. If we get back to that trend line, expect a rejection before a push higher. It's just going to be a lot of chop, a lot of sideways action. I can see the first half of a bottoming pattern appearing on the hourly, but that's just very speculative at this point. Let's go on to Tesla. Finally, it seems that we have found a bottom, and I'm still kind of working on this count, and I'm showing a couple of different things. The top of 70 went wave 3, this entire dump, this could be a wave 4 before we pull up for wave 5. Either way, even in the bear sense, if this peak is A and this bottom is B, you see that on the minute wave degree, we still should be expecting a move up for C. It doesn't really matter how you slice it, bullish, bearish. TSLA is looking for a move higher, that downtrend breaking, and now I'll be looking for a zigzag heading higher. I really don't want to see any sort of flat through here, especially an expanding pattern. Those expanding patterns I've been observing are just driving me nuts. I've been looking for a partial decline in Apple to form between these white trend lines. That shows a right angled and descending or broadening formation, having the price fall from that upper level and pull up before crossing the entire pattern forms what's called a partial decline. It's a bullish thing. It occurred right on that bearish reversal confirmation level at 148. So far, so good. This looks like it could be the beginning of a new motive wave pushing higher. We won't get a confirmation of more bullish action until 155. So again, the market here is just in flux. It's neither bullish nor really bearish. It's just kind of floating there. And since we looked at Apple, let's go to Nvidia, which has also been going through what I'm calling a partial decline. But now, given the length of time that has passed, I would say it's no longer appropriate to be using that analysis. And there's actually a risk here that this is starting to look like a topping pattern. And you're going to see it as soon as I adjust these trend lines. I'm going to take this lower level and I'm going to connect the two dips we have. And you're suddenly going to see it. You're suddenly going to see that rising wedge form up. Interesting. I got to keep an eye on Nvidia. Again, it's kind of between bullish and bearish levels, not really doing much. American Eagle Outfitter has been going through a correction cycle as well. When I consider this as a flat of some sort, an expanding flat, it's so annoying when the point B is higher than the beginning of wave A, and then C pushes below the extent of wave A. I've been seeing this a lot, where wave C seems to extend 161.8% of wave A, which is not something I'm acquainted with, like in terms of Elliott wave analysis. A should equal C. When we do see this extended wave, we should be watching it very closely, because it very well could be the beginning of a new motive wave heading in that direction. But that does not necessarily mean we're not in some sort of expanding pattern. Looking for those alternating 3-wave and 5-wave forms can help give us a clue into the nature of a reverse pattern if we are forming one, but it just becomes so hard to forecast in there. And the market, I believe, really is. The price action in the market is generating a ton of uncertainty. Let's check out VIX. Of course, VIX spiked super high the other day. Starting to come down now, which makes sense. It makes sense. And we could even see VIX drop sharply back to these levels we saw in the first week of March if we get a SPY rally, which I would anticipate, because the dollar to me looks like it's very weak, having come out of this, I'm calling it a leading diagonal triangle, and finding a new high, but now reversing harshly. We might be observing a large correction down. There's a falling wedge here, and this incoming downtrend could be wave A. This could be wave B. It would be a weird B wave because it doesn't have a very good 3-wave structure. We could probably figure it out and push one through here. Honestly, it looks like the dollar may come higher to form that B wave for 1, 2, bounce up for 3, and then we start another dump for that C wave that would be suggesting this falling wedge is actually not very bullish. Remember, the price can do whatever it wants, whatever notion you have of chart patterns. There's no guarantee. And Bulkowski actually addresses that on his website. You can do what's called a busted pattern analysis. When the price goes the other way, you can still use your analysis, and he provides the statistics to do that. The SLV has been responding to the dollar quite strongly. You can see this big reversal we formed. This flag pulled through here. This is definitely a bull flag. And on a smaller time frame, that peak came in at 2014, and we got above there. So I felt pretty safe holding my calls. We had a confirmation of this flag. The price rejected, fell down right towards the end of the day, right when I was feeling comfortable, right when I wasn't even looking, wasn't even at my desk, and my phone buzzes, and I look at it, and I go, oh my goodness, I got a price alert here, and we're below the trend line now, looking for SLV to turn back up, try to set a new high. This could still be a half staff formation where we have some congestion in the price before the second half of a move. It would be a spectacular move. We'd be looking for a run the same height as the incoming trend, which started at 18.30 and pushed up to 20, so $1.70, looking for $22 on SLV possibly. That would be fantastic. I'm still holding those calls. It looks like 22 might be a significant level on a larger time frame. 22.46 here was the peak from which we fell. Yes, we may be on our way up there in a drastic way, and we'll be identifying a bottoming pattern through here. If that's not the case and the dollar actually bounces and goes higher, SLV is going to turn down, and that's going to crush my calls, and I am not going to be very happy about that. We'll go take a peek at GLD really quickly. In GLD, the flag looks even better. That's beautiful, right? You can see that. When we get these tight corrections, this typically occurs in wave 4 and wave 5. If it extends, it's very powerful. I might even be able to do a little count here. 1, 2. This could be 1 of 3, 2 of 3, 3 of 3, 4 of 3. Looking for 5 of 3. I'll have to do a proper Elliott wave count through here. It looks like there might be some issues, but it could be that wave 3 has extended twice. When the RSI is moving this bullishly, it's very possible we actually have multiple wave extensions within wave 3 of 3. So I'll be breaking that down later. Not right now, that's for sure. Let's do the meme stocks, because this was a big dump, huge dump. Coming into that trend line, falling below it. I'm sure this is news driven. I have not checked the news on AMC. Maybe I do that now. Let's see. AMC secures shareholder approval to sell more shares. I actually like that. I like that. The improving fundamentals will be what scare off the short sellers, not how many shares you hold. You are not that important to the market. The clearinghouse can make as many shares as they need to. The FTD warehouses by the DTC, they can house as many failures as they need to. What matters is when the company is going to survive and it's no longer profitable to be holding the shorts. It's all about the money, nothing else, bottom line. When it's no longer profitable to hold those shares short, that is when those positions will close. That's my belief, at least. This is good. This is very good. I was very upset when the apes voted no to share dilution in 2021. I voted yes. And sure enough, the company needed the money. And when the company didn't get the money they needed, it was bad. On Tuesday, let's see. AMC Entertainment Inc. won shareholders backing to sell new common stock, a financial lifeline for the movie theater chain as it continues to lose money because of low cinema attendance. Stop buying shares and go to the movies. That's what that screams to me. Okay, off my soapbox. Shareholders voted to increase the number of common shares that AMC can sell, an important tool for the company to stay afloat and potentially weather a downturn in the cinema industry that has pushed some competitors into bankruptcy. This is good. Maybe those remaining retail investors holding the stock they wisened up. The shareholder vote also authorized a 10-for-1 reverse stock split and will likely allow AMC to convert its APE preferred into common shares. The APE units closed at 162, down 6%. Let's go take a look at APE really quickly, turn off this news thingy, and we'll go take a peek at APE. It looks like we're breaking that downtrend, massive volume spike. I saw the volatility this morning, and it was kind of funny. There was a news article saying APE shares are up, and then, boom. Oh man, Arrepente just fell apart. Okay, so that was Ape. Let's go to GameStop next. GameStop having a similar volume spike. That's weird. It's not like, was there any news on GameStop, or is this just a sympathy thing? Let's see here. Top Reddit short squeeze mentions for Tuesday. Hilarious. Yeah, these are the common ones. But the one you haven't heard of is, of course, Playboy. And we'll go over Playboy too. Playboy does have short interest, and it is a good company, I believe. Now, maybe not always, but now I see it improving fundamentally in terms of increasing its market share. We're going to get some economic data on Thursday when earnings are reported. Maybe we finally found a bottom in GameStop. That would be nice. Implied volatility stopped going up as the price is falling, so that's a potential reversal cue there. Looking at Playboy, we had a spike in after hours yesterday. Price fell from there and is holding its ground quite well. What I'm really enjoying about holding Playboy is that it's not following the market drama. This could very well be some sort of flat bottom we're putting in right now. I am happy with it. I'm holding calls, just moving into it optimistically. It is speculative, of course, so play at your own risk. I think that covers the bases more or less. SPXU, I didn't go over XPXU. I haven't looked at XPXU for a while. Big push higher, starting to retrace now. We'll see if this wasn't a 3-wave. Maybe there's a 4 or 5 count I can fit through here with some sort of diagonal. I'm going to need to see the price fall below 1566. It's currently floating right above there, but I'm going to see it fall below there before I say we're going back down. Again, I see broadening patterns all over the market, and it's just killing me. It's just all the volatility. We're up, we're down, we're up, we're down, we're bullish, we're bearish. So I'm not going to be taking much of a stance until we get a really good move one way or the other, or some news event drives everything in a certain direction. QQQ did a bunch of bouncing between the 100% and 161.8% extension of that initial push lower after our bounce. Where are we? What's the price doing? Are we going to set up some bottom patterns? It looks like we're trying to carve bottoms out here. Maybe I should take a peek at the yield, the 10-year treasury yield, TNX. Big fall, falling down to 34.83. There's support there. This would be a fantastic level to turn back up, but if the treasury yields continue to drop, this is where they would reverse. Look, here's a reverse triangle, right? 1, 2, 3, 4, 5. You have all the touch points you need. If we get a partial rise through here, that is to say that the price fails to pass the entire pattern before turning back down. This would be a bearish indicator, and when we fall below 34.83, that would be a confirmation, and we could put a price target down there. It looks like I might need to zoom out into a larger time frame, understand this big channel that the price has been in. Yeah, let's just clean this up for just half of a moment here. Right there, you can see the price is just on that level. And maybe this is even narrowing. Maybe this is even 1, 2, 3, 4, 5. Ooh, and we're going to see a reversal. What? On treasury yields? No way. No way, I say in disbelief. And you know what that means. That sense of bias, that typically marks an important point in the price action. We could actually see it all reverse. We really could. Something else I learned too is that I can actually look up a lot of economic indicators and Thinkorswim. So I'm going to be doing that. CPI is something I can do here. Wow, it's not quite that easy though. I got to go into my Analyze tab here. Oh, look, here's the M2 velocity, right? M2 velocity crash. It's been coming up since April of 2020. Very curious. I'm not sure what drives velocity or how it affects everything, but you know, I'm going to be studying that sort of thing and bringing it into the channel for sure. We can just go home here and we can see all sorts of things like how about it? We got interest rates, monetary data, cryptocurrencies even, producer price index, consumer price index, CPI. We can break it down by different sectors, housing, consumer price index for all urban consumers, rent of primary residence in the average U.S. city. Whoa. Yeah, that's quite the chart. Anyways, that's going to be all for now. Happy trading.